Hey guys, chart of the day. This is JR from the Market Surveillance Alliance, and let's take a look at what's happening out there. And you may be wondering what else has to happen. And one of the reasons a lot of people are doubtful is because there are specifics of a bear market that investors, I think institutions, and also the ones to blame are retail traders. Specifics of a bear market that everyone is looking to say, okay, I'm going to sell my house and I'm going to put everything in the stock market, and then I'm going to 3 p.m. and I'm just going to play golf. Well, that probably won't happen. And I'll let you know why. The basic dynamics of the market, and you have to understand over the last 20 years, there has been a seismic shift. Retail was just nothing in the market. Now, going into 2020, things were changing, right? And the tools, training, the information now is widely available. So retail has the potential to make better decisions, right? Sometimes they do, sometimes they don't. But 20 years ago, they never had the chance to make better investment decisions. So the game changed. That's the most important. So chart of the day will be just quick. Take a look at what's happening, position yourself, give you a little bit of guidance in how things can be played out and how you can learn how to pick your options. Don't go too out of the money. And of course, retail never plays in the money. Of course, they never follow Nancy Pelosi. So this is your opportunity to learn, okay? Let's take a look at Lyft. I've been wondering about this particular stock. A lot of people think they're going to go bankrupt. I don't think so, but you never know. The idea with options is always to avoid the risk of buying 100 shares of 1,000 shares of this whole thing, looking for the rebound. You can take from $100, even from $20 to $100 to $1,000. Reduce your risk. If you lose 1,000, you lose 1,000. But you don't have to be in a position like a lot of investors like, oh, I lost everything with FTX. Who asked you to transfer your money, everything, to earn 8% on cash or 8% on whatever? No one asked you to do that. You thought you're going to be pretty smart and you're going to move everything and life is going to be easy. No, it is what it is. You're actively taking risk here. So this is my, I don't like to call it point of control, but this is what I call equilibrium 2022, which is the base where you have that very strong rally and every single YouTuber, social media influencer, she or he basically called the bottom at this point, and then we know what will happen. We have a new low on the second half of the, we had a second low on the next couple of months. But it's kind of the setup in the case of Lyft, ticker symbol LYFT, Lyft Incorporated. It's kind of bird trap at this stage because people will say, okay, it's going to come to breakout. But based on what Nike is doing, if you take a look at what NKE is doing, you're probably going to have a lot of surprises where a lot of things are going to pop. This thing popped to 119. That's probably 15%, give and take. So coming earnings season, I don't think there are going to be a lot of opportunities for you to think to short the market. There are some other companies that might drop another 20%, and that would be a buy opportunity. Because I don't think, based on the structure of the market, that you will have something very bad happening because everyone is waiting for it. Everyone is just playing defense, and there's nothing worse than having everyone on the same side of a trade. That's what we call in the business crowded trades. For example, PayPal used to be a crowded trade, if you remember that, okay? Now, what I think this is a bird trap, so I'm ready to go up. What I will do, look for liquidity levels. The long tails on candlesticks, those long tails, that's money, that's liquidity. It goes from $12 to $12.50. And the next one goes from $13.50 all the way to $13.70. So I just go to quote media pick, take a look at option chain. And I will take all the way to January 20, which is the monthly expiration for next month. Just remove that and move to the next one, January 20, 2023. Merry Christmas, Happy New Year. A couple things. Pay attention. 1250. massive side. Now, this actually can fall in the whole thing like, oh, the whole market is going long. But the reality is that if I take a look who is on the put side, right, is put expecting a rebound. So this can actually fall on the same structure. But I think a lot of people are just shorting the stock. So I will take, I think still having our MSA all-weather portfolio, the 15 call. So I can take these for $10, go for the risk, have it plenty time, rather than just look for something to pop on the weekly basis. I'm giving myself a couple weeks to the expiration. That's something that a lot can change. It can be a market bounce if that happens because everyone is short right now. So I can take this one for $10. It's 10 cents. That means it's $10, probably $100. I can play this one. And then the 12.50, this is the one that is cost you 31. It's probably 32. That's on the ask. You see, ask is the buy. So 32, that's $30 per contract. I can take probably even $1,000 if I want to take risk. And what I will do is just, if I put more money on this one, I will probably just try to look where I will make money. This one, I'm probably conservative speaking. I will look for 60. If I buy at 32, I want to sell at 64, and I want to double my money. I'm still going to bet that this has some opportunity for a pop because the market is extremely under pressure. But I talked on my other video, Viva America, about the fact that on December 16, there was a full rotation, about $7 billion on December 16 that rotated on Microsoft. That I'm still think that's a bullish. I've never, a lot of people talk about it, and a couple of colleagues said basically that's something that never happened since 2007, I believe, give and take. But a lot of people will say, well, this is just a thing where people are unloading positions and are going to be a big short. Time will tell. But as a reference, I'm just going to take the risk that I think, based on the price pattern, there is a bear trap set on the daily chart between the first week and the second week, right? Well, first week and now third week, yeah? Is that right? Yeah, first week and third week of the month, and we'll have a roll-up all the way to 1350. It will pass through this. I'm not choosing something that is way out of the money. I'm looking for an opportunity in the next 3 weeks for a 20% pop. That happened here, that happened here, and that happened over there. So do I think a 20% pop is something that can happen again on Lyft? Yeah, I think it's something doable. So every time that we retrace, now, obviously I can think that there is something that this is moving lower. So I wouldn't actually look for 28. I would be more conservative and look for this one. As you can see, we have lower highs. This is actually a bearish trend. And I'm just looking for the match all the way to the liquidity that goes between $12.10 and $12.56 on Lyft. A lot of activity. I still be cautious. If I go heavy, I will probably be cutting my position depending on the structure. But rest assured, the whole thing, the contract high 45, I don't think we're going to get there. I will choose to look at quote media, pay attention to the chart. This whole thing last week was 80 cents. Why not? 30, sell 33. I can be selling at 40 cents, 42 cents for a 50% return. And if I have everything and the market is moving in the right direction, that means moving up, then I will choose to sell all my contracts at, if I get at 33, at 66, and claim my 100%. $1,000 to make $1,000. Now, the most important is I'm not risking a bunch of capital up front. I'm just reducing, making sure I'm just risking what I'm willing to let go if things don't go my way. But the most important, I will not be a bag holder in Lyft if it doesn't work. Hey guys, thank you for watching this video. If you like the video, if you have questions, if you have comments, if you want me to pay attention to any particular company, look at the charts and look at the potential call options into 2023 and 2024 and 2025, then just drop your ideas on the comment section and I will definitely record one of those videos this week. Guys, thank you so much and I see you on the next video.